Tyson Foods says it's closing more chicken processing plants. Meanwhile,
new tonight, Tyson Foods looking to sell its poultry business in China as the company cuts costs and revamps operations.
Which of these categories are the issues most concerning? Pork, beef, or chicken?
Why Tyson Foods is exiting China? Tyson Foods, the largest U.S. meat company, is considering selling its China business. What does this mean for Tyson, its competitors, and the Chinese market? Who are the main beneficiaries of this move? What will happen to the employees, suppliers, customers, and shareholders of Tyson Foods in China? What are the implications for the U.S.-China trade relations? How will this affect the political and economic ties between the two countries? Before we get started, if you like what we discuss on this channel and you haven't subscribed yet, please consider subscribing. Please give this video a thumbs up and share with others. And let us know what you think about this video in the comments section below. Tyson Foods is a multinational corporation that produces and sells chicken, beef, pork, and prepared foods. It is the world's second largest processor and marketer of meat products, after JBS. Tyson has operations in over 20 countries and exports to more than 130 countries. It has annual revenues of about $43 billion and employs more than 140,000 people. Tyson entered China in 2001 when it acquired a majority stake in a poultry processing plant in Haimen, Jiangsu Province. The company saw China as a strategic market with a huge and growing demand for meat products, especially chicken. Tyson aimed to leverage its expertise in breeding, slaughtering, processing, and distribution to capture a share of the Chinese market and compete with local players. Over the years, Tyson expanded its operations in China through acquisitions, joint ventures, and greenfield investments. It established 3 research and development centers for large industrial chain-based layouts and dozens of breeding farms across the country. It also diversified its product portfolio to include beef and pork, as well as chilled and frozen products for retail and food service channels. Tyson's China business generated annual sales of about $1.1 billion, making it one of the largest foreign meat producers in the country. However, Tyson also faced many challenges and difficulties in China. Some of these were related to the complex and dynamic nature of the Chinese market, such as changing consumer preferences, rising labor costs, fierce competition from local rivals, and regulatory uncertainties. Some were specific to the meat industry, such as food safety scandals, animal disease outbreaks, trade disputes, and environmental issues. Some were caused by external factors, such as the pandemic, which disrupted supply chains and demand patterns. One of the major setbacks for Tyson was the suspension of its poultry imports from China by the United States Department of Agriculture (USDA) in 2004 due to concerns over avian influenza. This effectively cut off Tyson's access to its home market for its China-produced chicken products. Although the ban was lifted in 2019, Tyson had already lost its competitive edge in exporting low-cost chicken parts to the US. Another challenge for Tyson was the presence of ractopamine, a feed additive used to promote lean muscle growth in pigs and cattle, but banned by China due to health concerns. In 2022 and 2023, China halted some meat imports from Tyson plants in the US after detecting traces of ractopamine in some shipments. This affected Tyson's ability to meet the increasing demand for pork in China, especially after the African swine fever outbreak that decimated the domestic hog population. A third difficulty for Tyson was the impact of the pandemic on its operations and sales. In 2020, China suspended poultry imports from a Tyson plant in Arkansas after more than 200 workers tested positive for the coronavirus. The pandemic also reduced consumer spending and restaurant dining in China, leading to lower demand for meat products. Moreover, the pandemic increased operational costs and logistical challenges for Tyson. as it had to implement strict health and safety measures and cope with transportation disruptions. These challenges may have contributed to Tyson's decision to explore a possible sale of its China business. According to sources familiar with the matter, Tyson has hired Goldman Sachs to advise on the sale process and has approached some private equity firms as potential buyers. The sources said that the sale was at an early stage and that Tyson could still decide to keep the asset. They did not disclose the valuation or timeline of the deal. If Tyson decides to sell its China business, it would follow the footsteps of Cargill, another United States agricultural giant that sold its China poultry business to private equity firm DCP Capital earlier this year. The sale would also reflect a broader trend of foreign companies divesting or reducing their exposure in China due to various factors such as slower economic growth, intensified local competition, and geopolitical tensions. However, selling its China business would not necessarily mean that Tyson would exit the Chinese market completely. The company could still export meat products from other countries to China, or form partnerships with local players to access the market. Tyson could also use the proceeds from the sale to invest in other markets or segments that offer higher growth potential or profitability. In conclusion, Tyson Foods is reportedly considering selling its China business after 2 decades of presence in the country. The company has faced many challenges and opportunities in China's meat market over the years. The possible sale could be driven by various factors such as market dynamics, industry issues, external shocks, and strategic considerations. The sale could have implications for Tyson's future growth prospects and competitive position in both domestic and international markets. A report by China Daily, a state-owned newspaper, said that Tyson's potential exit from China was a normal market behavior, and that it did not reflect any problems with China's business environment or meat industry. The report also quoted a professor from Renmin University of China, who said that Tyson faced strong competition from local players, and that its products did not meet the diversified needs of Chinese consumers. A commentary by Global Times, a nationalist tabloid, said that Tyson's decision to sell its China business was a strategic mistake, and that it would lose out on the huge opportunities in the Chinese market. The commentary also criticized Tyson for being short-sighted and ungrateful to China, which had helped it recover from the COVID-19 crisis by importing large amounts of meat from the US. An article by Cakeson, a respected business magazine, said that Tyson's possible sale of its China business was a rational choice, and that it reflected the challenges and risks faced by foreign meat producers in China. The article also mentioned that Tyson had been involved in several food safety scandals and trade disputes in China, which had damaged its reputation and market share. That's all for today's video. Thank you for watching. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more content like the one you've just watched. Also, don't forget to hit the bell icon to get notified of our latest uploads. And let us know what you think about Tyson's possible sale of its China business in the comments section below. We would love to hear your opinions and feedback. See you next time. Bye.